Hello friends, welcome to AFS. Do you know, many employees find it difficult to understand the structure of their CTC or the salary structure. This is more so for people entering the workforce or people who are already employed but are from non-finance background. They generally have questions on their mind like, why is the CTC so different as compared to their take-home pay? Or why are certain components added to their CTC which they have never availed? Or why are certain components partly taxable whereas others are exempt? Or yet another one, as what is the variable component of their CTC and when will they get it? Do you have such questions on your mind? If so, listen in as we'll attempt to answer these today. CTC stands for cost to the company. This is the total cost that a company or employer incurs on its employees in a given year. To better understand CTC, let's divide into 5 categories. The first one being the basic salary, the next being the allowances, third one being the perquisites, fourth being the retirals or retirement benefits, and the fifth being the deductions. So now let's talk about basic salary. Basic salary is the base salary or the fixed amount of salary paid by the employer to an employee. It generally depends upon the level at which the employee joins in an organization. Basic salary is a fully taxable component, and many other components of the salary structure are calculated as a percentage of base salary. For example, HRA is calculated as a percentage of basic salary. Now let's talk about allowances. Allowances are fixed monetary benefits given to an employee over and above the basic salary. They are generally given to an employee to meet his cost that he is to incur on his official duties. They might also be given to meet his personal expenses or any unusual conditions of service that an employee might have to go through. We can split the allowances into 2 broad categories. Allowances that are exempt or partly taxable as per the Income Tax Act, or allowances that are totally exempt based on certain rules as per the Income Tax Act. Let's take the most popular allowance, which is house rent allowance. House rent allowance is generally 40 to 50% of basic salary and is given to an employee to meet his cost of rent. HRA is exempt as per a stipulated rule under Section 1013A of the Income Tax Act. HRA deduction is based on the city of the rental accommodation and as well as the rental expenses that are paid by the employee. For claiming the benefit of HRA, you have to provide your rental agreement along with rent receipts to your employer. Another allowance is traveling allowance. This is generally given to an employee to meet his travel cost in fulfillment of his official duties. This allowance is fully exempt if the expenditure is incurred for the stated purpose. Another common allowance is relocation allowance. This will be given to an employee to relocate to the new place of service and to transfer his personal effects to another place. Yet another common allowance is leave travel allowance. LTA is generally given by the employer to employee to meet his personal cost of domestic travel along with his family. The exemption on LTA can be claimed by an employee twice in a block of 4 years. Yet another example of an allowance is medical allowance, and this is given to an employee to meet his medical expenses. Earlier this allowance was exempt, but now as per the amendment, this allowance is fully taxable. So these are some examples of the allowances that you will find in CTC of an employee. Now let us talk about perquisites. Perquisites are certain benefits received by an employee as a result of his official position. These are over and above the basic salary and allowance. Perquisites are generally in the form of non-monetary benefits. We can club perquisites as taxable perquisites and non-taxable perquisites. So let's talk about the non-taxable perquisites. Non-taxable perquisites, as the very name suggests, are not taxed in the hands of employees. These can be, for example, free use of laptop or computer given to an employee for his official purpose as well as personal use. or provision for non-alcoholic beverages or snacks given to an employee during his work hours. Yet another could be medical treatment of an employee along with his family members in a hospital owned by the employer, or reimbursement of the medical expenses that are incurred in a government-owned hospital or approved hospital by the Commissioner of Income Tax. Yet another example would be training costs incurred by an employer for upgradation of the skills of employee. Now this can be soft skill upgradation or might be some technical training given to an employee. So these are some of the benefits given to the employee in the form of perquisites which are not taxed in its hands. Now let's talk about taxable perquisites. So the classic example of taxable services or perquisites is first, the house that is given by the employer to an employee, which is leased by the employer, which is also called as rent-free accommodation or concessional rent accommodation. So generally, instead of giving an HRA, an employer will provide NCLA, that is company leased accommodation, to the employee. In such circumstances, income tax says that this perquisite has to be valued based on the lease cost of the employer or 15% of salary that of the employee, whichever is lower. Yet another example of taxable perquisite is ESOP, employee stock option plans. So when employee stock option plans are issued by an employer to an employee, they are taxed in the hands of employee according to the scheme provided as per the income tax. Another example of taxable perquisites can be a motor car provided by an employer for use either personal or an official together, or just personal use of an employee. Another example of taxable perquisite could be credit card provided by an employer to an employee. So these are some examples of taxable perquisites, and as per the rules given under income tax, the value will be derived for these taxable perquisites and they will be charged to tax in the hands of the employee, and many times these are also part of the CTC of the employee. Now let us discuss retirement benefits. Retirement benefits can be in the form of gratuity, employee provident fund, pension, leave encashment, and these might be made a part of your CTC but are not generally paid during the continuation of service. Let's talk about the two main components of retirement benefits, the gratuity and the employee provident fund. Gratuity is an amount that will be paid by an employer after an employee renders a continuous service of at least 5 years. This is made a part of CTC but will be paid only after the retirement or resignation of an employee on fulfillment of the continuous service condition. Employee provident fund helps an employee to make small savings for his retirement. Generally, an employer will also make a similar contribution to the employee provident fund as is made by the employee, and this provident fund will earn interest on both the contributions, that is employer and employee contribution. After the employer deducts the employee's contribution, it will be paid to the EPFO, that is Employee Provident Fund Organization. So these are some kind of retirement benefits that might be booked in your CTC, but you might not receive them year on year. You will only receive them after your resignation or on your retirement. Now let's talk about deductions. Deductions are the items that are deducted from your gross salary. These will reduce your take-home pay as compared to the gross salary. These are of two main kinds. The profession tax, which is the state level tax, and is levied on people earning income under their head salaries or on professionals. The another deduction is income tax. So income tax will be deducted from your gross salary and paid to the income tax department in the form of TDS, that is tax deducted at source. So both these kind of deductions will reduce your gross salary and your take-home pay will be much lower as compared to your gross salary. In the end, I would like to give a piece of advice for my young friends. While making decision whether to join an organization, do not base your decision just on CTC. I would like to advise you to consider some of the very important factors, like read about the company as much as you can, Understand the business, growth prospects, and longevity of the business. Understand the job profile and your responsibilities in the company. Talk to people about the culture of the company. Culture of the company is single most important factor because you are going to spend 10 to 11 hours of your time in the company along with the people there. Inquire about the leave policy, the HR policies, as this would help you to take informed decision. Thank you.